feel like the story lately in Oregon, Washington right now, it's kind of split. There's homes that are flying off the market pretty quick that are priced correctly in good condition. But then there's a lot of those houses where sellers are kind of hanging on to those 2022 prices, and those homes are sitting for a lot longer. What do you think about that?
Well, I mean, the reality is we know in today's market, we're back. We're not in a crashing market like 2010 and 2012. You might hear the crash bros out there. That's just not reality. That's you young social media guys. You like those catchy phrases. But inventory, yes, it is up. Values are down from the peak, which was June of 2022 in the Northwest. So if you are selling, especially here in the fall market, there's two keys. You either have to be the best price, best condition, and best location. So you can't change the location. You can only change price, and you can change condition. So what we know is certain areas and certain price points, higher price points are still moving pretty good. It's that lower middle price point just because of interest rates being high and affordability. The demand is still there, but you can't be higher than the competition. If you have competition, if you're not the best price, buyers right now, it traditionally across the nation and here in Washington and Oregon, it's a buyer's market in most areas. And that's why it's so important to know, do you have any competition? If you have competition, you better be better priced than them or have a lot more amenities.
So how do you get across that with a seller who comes in and thinking, well, if I price it too low and we don't get any offers, then I'm already kind of shooting myself in the foot at that point? Because I can understand where they're coming from with that thought process, right?
Yeah, yeah. So I get that question all the time. The question is, can you undersell a property in today's market? In the first time home buyer price point, absolutely not. You can price it at $1. Our team, Keegan, we have our My Rocket listing program. We buy a lot of houses. People that just want us to come in and buy them, they don't want to list them. Most of them are beat up and we have to go in and fix them up. We always underprice them. We always like to stay in that first time home buyer price point. We always underprice them, and we always get multiple offers, not 40 offers back in 2022, but 3, 4, or 5, and it gets pushed up. First time home buyer price point, you can't underprice it. The only way you could underprice a property in today's market is if it was ultra luxury. I'm talking $3-4 million property that is maybe rural, that there's just not a lot of buyers. You're in a rural area that you just don't have a lot of buyers. You could underprice that property, but across the board, if you're in an area that has a lot of actives and pendings, and that's why you need to know what's the turnover ratio in the area, you can't underprice a property. My favorite my favorite phrase, a home setting on the market is not like a fine wine. It doesn't get better with age. You price it right out of the gate and it'll sell. If you don't, you're going to do a price cut. That's why nationwide, we're about 42% of all the homes on the market have price reductions, and they're chasing the market down, and they might even be helping someone else sell their house.
Yeah. Yeah, you got to be careful with that though, right? Because those upper end homes, those ones, you kind of got to play around with that pricing a little bit more. It's more the first time home buyer, mid-range houses where you got to price it correctly.
Or areas or luxury price points. I mean, 2.5 and below, because that market is still very, very strong.
Yeah.
Because the reality is people with assets right now in America are doing well. Mm-hmm. Assets are going up. Stock market's the highest it's been ever. Yeah. So that price point is still it's that mid to lower level that rates, inflation are still having issues with.
Yeah. And then when it comes to, because we're hearing a lot right now because we're in Oregon, Washington, there's a lot of rain that's about to start coming. So our market kind of shifts with the season a little bit.
Absolutely.
People like to sell in the spring. They like to sell in the summer. So what are you saying to those people right now that might be looking to sell right now, but not necessarily, they're thinking more, oh, we're going to wait till spring to time the market. Interest rates cuts are the big thing right now.
Sure.
That should be coming, and it should be going down by the springtime is what everybody's thinking.
Right.
So for someone who's looking to sell, but they're thinking of waiting till spring, what would be your thoughts on that?
Well, the first question is I always ask, why are you selling? If the reason they're selling is they know for a fact they're moving and they don't have constraints, meaning there's a reason they have to stay here until spring. Okay. Because everybody thinks, okay, in the spring it's going to be better. But this is what we know. Okay. And that's why it's so important to understand the market. We had the slowest selling season in spring and summer in 2025 and 2024 in history, not only Oregon and Washington, but across the board. So what that means is there is demand setting on the sidelines, but interest rates were 7 plus. Now interest rates were down about 6.35, the best they've been all year. So if you don't have constraints keeping you from selling, we know this, there is less competition in the market. We didn't have the big selling season that we traditionally do, so we still have buyers out there. So if you have less competition, we have the lowest interest rates we've seen all year. Now might be a really, really good time to sell in today's market.
Yeah. For someone who comes to you, though, say they want to sell their property, they're not really in a time crunch. Their why isn't really big enough right now. They do not have any constraints. What would you recommend for someone like that?
You can't sell a house unless it's on the market. That's what I would say.
100%. Locally, Oregon specifically, that we're seeing a lot of builder incentives with a lot of new construction.
Yeah.
Inventory with new construction's gone up across the board nationally.
Yeah.
And in Oregon, there are some good deals happening. What do you think that outlook is for builders, and what do you think their next steps would be, or for someone who might be selling a property in that area? What does that look like for them? Because it seems like it's a little bit tricky right now.
Sure. So we got to look at what are the facts. We have the highest level of unsold new construction since 2008, 2000. Okay. We have the highest new construction on the market than we have since 2011 when things started going sideways. Okay. So that's number one. Nationally, 9.3 months of inventory. That's why for the first time in history, it's cheaper to buy a new construction than resell. Okay. But looking down the road, new construction levels have dropped off the face. So they're not building a lot of new construction. So in about 24 months, we're going to have a shortage again. Okay. The second thing is if you are a resale and you're competing against new construction, the fact is you're in trouble. Because what we're seeing is the highest levels of incentives, meaning the builders, they don't want to cut their prices, but what do? You remember we were talking to the guy in San Antonio. He bought a new construction and he got 2.99% interest rate, 30-year fixed, and we're at 6.5 right now. And he got 7% in concessions. So they didn't lower the price, but they gave him all these incentives. So if you're a resale, number one, you're going to have to sell it on a big discount to compete with the new construction. But on the other end, Warren Buffett, one of the smartest, what do they call him? The Wolf of Nebraska. Yeah. He's a smart guy.
Yeah.
He just dumped a ton of money into all the new builders because he believes in housing for the future.
Yeah. Yeah, I think that's big. I mean, if you can get into a property with 7% concessions at 2.99% interest, do you think that's a sign that builders are desperate right now to just move their inventory that they have on the market?
Yeah. Builders don't necessarily care right now on their property. They have to get rid of that inventory. Okay, so they're gonna do what they need to do in order to move product. It's different. That's what they do. They sell properties. A homeowner, someone, your friend Joe Smith, he doesn't necessarily need to sell. So that's why they're kind of holding on a lot to those 2022 prices. Now, the thing that I always say specifically here in the Northwest, Mr. and Mrs. Seller, if I would have talked to you in 2019 And in today's market, you would have had 48% appreciation from 2019. Would you be happy? 90% of the people would say yes. Yes, you might have lost anywhere from 2 to 8% in value from 2022, late 2022,
Mhm.
but you're still significantly higher.
Yeah.
Yeah.
Yeah, and then when it comes to kinda the migration of in Oregon and Washington specifically in Oregon that we look at, I mean, we talked about some numbers earlier this week about, like, places like Medford or Bend, and some positive signals for those,
Yeah.
but as we talked about, there's a smaller size that we're looking at for those. Do you think there's a shift with people needing to move out of places near Portland, the suburbs of Portland, to get to more affordable housing maybe in those areas, or do you think it's something else?
Well, I think it's a combination of affordable housing, crime, and taxes. Okay. Specifically in Multnomah County. If you look at Multnomah County, you've seen depreciation. And in certain areas, Pearl District, you're seeing massive depreciation. And when I say massive, got to be careful with those words. That's like 8, 10, 12%. Overall in Oregon last year, we've seen about 1% depreciation. So yes, you're seeing a migration from the cities to the suburbs to rural. Affordability, crime, taxes. Those are the big three keys. And money goes where it's treated best. That's why we're seeing a lot of migration out of Oregon to Clark County. And now with some of the new things that have came in Washington about capital gains, you're seeing a migration from there as well. So that's why Clark County, compared to where it was, has slowed down, and Seattle specifically, Tacoma and stuff like that.
Yeah, I would agree. Well, if you're looking to buy or sell a home in Oregon, Washington area, reach out to the Shivers team. Thanks for watching.